Hello there. So today I'll be talking about iShares MSCI Germany ETF that goes as EWG. So, EWG tracks a market cap weighted index of German companies. It covers the top 85% of German companies by market cap. So, this is actually an ETF that is traded on German stock market, and EWG holds a concentrated basket of German large and mid caps that captures the German market very well. It omits small caps, which are a minor part of the overall market. Right. So, the fund pair, you know, rank reflects the ranking of a fund's MSCI ESG fund quality score against the scores of other funds within the same pair group, as defined by the Thomson, Reuters, Lipper Global Classifications. iShare MSCI German ETF ranks on the 87th percentile within its peer group and is the 15th percentile within the global universe of all funds covered by MSCI ESG fund rating. So this is actually a very good one based on the ranks, and I want to show you something that might interest you, right? So, like I've always been saying, and I will always say, before you invest in an ETF or decide to go into something like ETF investing, you should actually get to check out some things that might be of interest to you. One of which is the assets under management. You have to know how much it's worth so you can see if it's something that is really big. And you can see here that it's worth $2.94 billion. So that's quite huge in the German market. And you should also pay attention to the average daily volume. So you can see that the average daily volume is actually $179, and with an average speed of, in percent, 0.03%, which is quite good. And the data portfolio, right, is actually with an average market cap of $64.43 billion, and its price and earnings ratio is actually 20.52, which is quite impressive. And the next ex-dividend date is actually 14th of December 2020. So it's a good time. You can still catch up if you can. And the number of holdings actually has 64. So now let's take a look at the chart for this. And this is just the max. You can get a C that is not bad as well. The economic meltdown has actually affected a whole lot of companies all over the world, and but still it is actually showing that it's going to pick up, because you can see that anytime it drops, it goes down, there's always this upfront movement again afterwards. So I think it's a good one, and you can see that it's actually going to go up based on the previous chart, right? So if you have to take a look at, for example, you want to see for 5 years, right? You get a CETA for 5 years, you see that it's actually even good. But here, there's a problem. We all know that, I guess. So as of March 5th, 2020, there was a problem based on the pandemic and so on. So it went down, but you see, started going up again, and it's going up. So it's a good one. It's quite promising. And if you take a look at for 1 month, you see it has a negative 3.16%, for 3 months 3.74%, and for 1 year 6.73%, for 3 years negative 1.87%, for 5 years 5.24%, and for 10 years 5.26%. So it's really good. It's a really good one. I'll advise anybody who wants to actually invest to actually go into this. It's really good. And you can see the top 10 countries. Actually, they're just two countries. There's Germany and the United States. And Germany just, has the largest part actually as of, you know, today, with 99.13%, and the United States has less than 1%, standing at 0.87%. So here are the list of top 10 sectors, right? That is into this ETF. So we have the financials that ranks at 20.45%, technology 18.27%, consumer cyclical 14.61%, industrials 13.36%, healthcare 12.43%, basic materials, 10.53%, telecommunications, 4.95%, utilities, 4.34%, consumer non-cyclic, 1.07%. And he had a list of companies. So just in case you're looking at the holdings, like you want to see what companies can you invest in, you can see that some of the companies you would actually be familiar with, SAP SE, which is 12%, 0.36. Siemens AG, you should have heard about Siemens before, 7.71%. Allianz SE, 6.10%. Adidas AG, 4.84%. And Bayer AG, 4.84 as well percent. And the Dutch Telecom AG, 4.30%. The BASF SE, 4.14, and so on. So now, based on this, I would go with one that I'm really familiar with, that we all should actually be familiar with or should have heard of. I'll go with maybe the Adidas AG, but I'll show you something, one of these that you should try to invest in. And before I go to that, you can get to see the daily speed is actually really, quite good. It's quite unilateral and it's quite cool, and you can get to see that at this point people traded it a lot during the pandemic and so on, and afterwards now it's been normalized. So you can see the volume based on the months, and you can see the industry breakdown, like I said before. So it's actually a really, really good one. And now let's talk about one of the companies. For example, the Adidas AG, like I said now. So you get to see that this is actually um, a very good one. The Adidas AG goes for $277.70, and it's under this, um, German, ETF. And if you get to see, you get to see that the chart is quite good. It previously closed at 277.7, and it's open at 279.3. And there's one good thing about it. They actually pay dividends, right? And the dividend yield is actually 3.35, and the EPS is 9.39, and the revenue is actually $20.58 billion. So that's a whole lot of money. And the next earning date is actually November 10th, 2020. So you can buy this stock, this ETF, and get this dividend, this next one. So I would just advise people, you can decide not to go with this. You can decide to go with any of the listed companies right here. You can decide to go with maybe Siemens or SAP, and I'm sure you actually make something out of it. And there's one thing I would like to show us again, which is quite interesting, right? On investing.com, you get to see that they've made it clear that is something that once you invest in, you would be safe. To some extent. For example, if you decide to go for on a long-term basis, you get to see that for 5 years, the chart is quite promising and it's quite good, and you will make something out of it. So depending on how long you want to invest in, I'll advise you, if you're going to trade on this, you should go for a long-term basis, maybe 5 years. If you just want to make some, money over a long time, you can just decide to invest in any of these instruments, and you see how it goes. So here's a good one. Take your time. You can decide to go with any of the companies. So you might not look at the percentage, but in some cases we actually go with this because we want to know what people get to invest in more. And afterwards you can just decide. But for me, I will go with this because this is really good based on the capital, based on the amount of traded ratio, and so on, the expense ratio, the asset under management, and the average daily volume. I will go with this. This is a good one. Key into this, and I'm sure you will not regret it. So should you have any questions, please feel free to drop your questions in the comment section. Thank you.